It's really interesting the way we do things here relative to rebalancing portfolios. It's really done at three different levels. The first level is always exchange traded funds and mutual funds. They get rebalanced on a daily basis. The second level is each one of the portfolio managers are rebalancing within each one of their individual portfolios. And then the third level is we look at the family of portfolios, all the different things that you have, and then we rebalance back to your risk target. Does that make sense? Yes. That's not common in most financial firms. It is just not common. And neither is asset location investing. And if you've heard me talk about this before, asset location investing means, because we've all heard about asset allocation investing, but asset location investing really is looking at the portfolio, looking at the tax registration on the accounts, and targeting specific tax registrations for specific rates of return. Now, give you an example. If I have a IRA fully taxed, a Roth fully tax-free, and a non-qualified account, which is more tax-favored, so your capital gains instead of ordinary income tax. I'm going to look at those three, and I really want that Roth, the tax-free money, to be the most aggressive. Why do I want that? Because it's tax-free. That's going to give me the most bang for my buck down the road. And then next, I'm going to look at the tax-favored accounts. So that's going to be a little less risky, a little less return. And then the IRAs, which is quite frankly the biggest problem from a tax standpoint, I want that to be the least amount of return. Now, I still want to get my target average rate of return. But instead of doing what most firms do out there, which is just making all of them the same rate of return, we're going to slant it to the tax-favored side. And that makes a huge difference in what you get to spend down the road, a huge difference. And we do that, in my opinion, we do that better than anybody else out there. We literally, if you go to another firm and ask them, what percentage of the money that you manage is tax-free? Well, when you talk to them, it might be as high as 5%. Most of them are more around 2 to 3%. Our firm, just in Roths alone, are over 24%. And then you take in the tax-favored or tax-free life insurance cash value, now we're well in the 30% range.